Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge, to say the least. There are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, October 11th. I'm your host, Jesse Allen. Thank you so much for joining us. MarketTalkAg.com. That is our home on the web, MarketTalkAg.com. That is where you could find us. And we can bring you all the latest in market information, news, and much more. You can also find every podcast source where you can listen to Market Talk by going to our website, MarketTalkAg.com. When we come in here on this Columbus Day Monday, federal offices closed. We didn't get our normal weekly USDA reports. We'll get those tomorrow, along with an October WASDE report. Markets kind of preparing themselves, it appeared, today ahead of those reports. Let's talk about it. Let's bring in our good friend John Heinberg with Total Farm Marketing. John, good afternoon to you, sir, as we get prepared for what tomorrow may bring from USDA. It seems like the trade has a pretty good idea going into this October WASDE report, what we're going to see, and it almost seems like that was reflected in Monday's market action.
Yeah, I agree with that totally. We just got some nice price action today that just kind of tells us what the expectations may be tomorrow for those numbers. Obviously the biggest weakness was in that soybean market, taking out the nearby low from last week underneath that 31 level, closing down at 28 today, down 14 cents. Again, the expectation is probably going to see bean yield come up tomorrow, maybe another half a bushel per acre, getting it up over that 51 level. That could put carry out close to 300 million bushels. So with the impact of the stocks report here from the 30th, adding a little extra production, all of a sudden the bean supplies look a little bit more comfortable. And maybe that's what we're pricing in here. Now, we'll see how that shakes out. Does that turn into more demand? We've been all kind of sitting back on pins and needles waiting for the Chinese to step in and pick up some beans. We need to see that. We're running significantly under last year's sales pace. And then throw a Hurricane Ida in, and the shipping pace is obviously way behind where it needs to be as well. So that'll be the interesting thing that we'll see tomorrow is, did we price it in today? Or are we going to price it in on the overnight, have a hard session in the morning? We'll see how that shakes out. Technically, we probably are set up for that, at least right now. We will also get the export inspections tomorrow too, at 10 o'clock window before the report. We didn't get those today because of the Columbus Day holiday. So there's a few things that will come into play. But again, today the market was definitely leaning heavy on that bean market, kept some buying strength in corn. Wheat just basically consolidated, even though it did fade a little bit softer.
Now, John, I wonder, we talk about maybe pricing some of this in on the bean side. Do you anticipate any scenario where we get tomorrow's report and we maybe priced in today what we're going to see to where we don't really have a whole lot of movement tomorrow? Or do you think we have a lot more room to the downside in this soybean market?
Well, technically today points down. I'm looking maybe down to the 1180 area. We go back and challenge that March, low off the planting stocks or the planting acreage number from the March report. That could be our next kind of landing spot if we continue to break lower. And that's another, basically 35 to 40 cents down. So we'll have to see how that kind of plays out. That would come maybe with a little heavier report than necessary. I think $12 will be an area that we could go land at just because of the psychological level, giving us some support overall. The market right now is looking at their estimates. They're plugging in some numbers accordingly. If the report's fairly in line, it wouldn't surprise me that we see the market stabilize in here, maybe even pop back a little bit again as we see some profit taking on the other side of the coin, saying basically that, hey, this thing was heavier than we think it is, but not over the top. So, but right now the bearish bets are definitely coming into play, especially the way prices handled Friday as well as today. Think about it. We were 1260 on the overnight session on Friday, and today we closed it out at 1228. So that's a pretty big move in a couple of days, basically just on report anticipation.
Well, as soybean harvest rolls along here, we see all this this bearish sentiment in the soy market. I would have to think, if I'm a producer, I'm thinking hard about locking in some floors here ahead of this report, especially if I'm looking to turn around and maybe move some soybeans, rather rather quickly off the combine.
Yeah, it's definitely something you want to keep on your radar, whether you make the sale. Then if you want to participate in potential upside, bull call spread out to March, pick up a call, all the money out into January, and just see if we get some turn back in this market, or looking at a cheap put just to get us through the next few days. They're really reasonable right now. November puts at least get you till the 21st of October. Not a lot of time on that, but at least if you got a washout event tomorrow, we got something underneath. Definitely those bushels that are at risk. In other words, the ones that you're planning to move off the combine could be getting very suspect and maybe fall into a low here this time of the season. So we'll have to watch. On the other side of it, though, we got to keep an eye on the soybean oil market. Okay, it has been strong. It kind of tied with crude. Now today it did see some profit taking and sell back, even though crude oil prices pushed out and touched $82 a barrel today. Like I said, today felt like just some squaring up on that oil market more than anything. If we continue to get some bid back into that soybean oil market, that could be enough foundation to get this bean market price supported again. And again, that's why that first level around $12 might be so key, just because of that value of the oil and the competitive nut prices that we're seeing out there, on the canola oil side, as well as palm oil side, and as well as just the energy ties to the crude oil market.
Now, on the flip side, John, this corn market, it's a different story. This corn market's just been kind of quiet the last few sessions, chopping around, give up a couple cents, take a couple cents, really just kind of firming in a very tight range. Heading into tomorrow's report, we talk about maybe, some changes on the numbers on the corn side. I wonder if we get a fairly bullish report tomorrow, is that going to give us a pop in this corn market, or could it? What are the dynamics looking like there?
Yeah, again, tomorrow we're expecting to see the yield come down slightly. Production just get back under 15 billion bushels. The question, though, is what's going to happen on the demand side of the equation? Does the USDA make any adjustments here? Probably too early to do that on the export front, so maybe not. We'll probably stay status quo. We do have a few million bushels to pick up here from the quarterly grain stocks report that we have to work in. So not a whole lot of changes expected on the corn market. Now, realistically, we're staying within the trading range we put together on the 30th when we had the quarterly grain stocks, 27 on the low, basically 48 on the high. And we've basically been in between there since. Now we're at the bottom of that range. Now, what am I looking at? If we get a little heavy, we get some technical break, possibly take it down to about the 517 level. That's a 200-day moving average. That's where we bounced off last time when we kind of put that September low in. Top side, if we got some momentum, if something comes in a little bit lower than expectations, we got a lot of resistance back at that 550 area, that 548, but it wouldn't shock me. We go challenge the top of the trading range up to the 560 window. We've been seeing some buyers step in. Mexico bought some corn last week. We're still competing in that front. But if all of a sudden U.S. supplies still do look a little bit tighter, it wouldn't be surprising to see that this market move up. And then with that, throw the cash market in. It depends where you are regionally, but we've got some spots that are still looking for corn, and those end users are paying for it right now. I encourage producers to get this stuff out of the field and get it to them at the elevator.
And I wonder as well, you talk about some of those end users looking for corn, how many producers are going to say, you know what, I'm going to store corn off the combine here and possibly see if these end users will pay a little bit more down the road. And I wonder too if producers with the low volatility in options and puts and everything right now in the corn market, if they don't look to maybe lock in some floors here, and if they're thinking their strategy is holding some corn in the bin for a little while longer than just selling it off the combine.
Yeah, and I think that's going to be something we're seeing. We're going to see that people make deliveries against the contracts. They got to get taken care of here. Maybe we'll see some movement out into the May or July months on some roll. I mean, we do have some carry in the market. And if you go look at some of the basis levels, again, those springtime basis kind of firm up a little bit. I had one client had the chance to roll it out to May, pick up about 15 cents here about a week or so ago to do that. Then on top of it, he was getting about a 20-cent basis bump. So, those are some things that might be available to producers out there as well. Biggest thing is, we got a lot of things going on outside the markets that make me really nervous, from the price of energy to the shakiness in terms of what's happening with the dollar and as well as the stock market. Things could really roll over pretty quickly. If you're going to take that chance and go ahead and store this product in the bin, make sure we keep some type of floor, whether it's just safety valve floor underneath just to protect yourself. there's a lot of things that could come together very quickly here that could turn into a black swan event and really damage the price of our corn product for us. So with that, keep that on the radar. If you're going to be, one that wants to hold it, just make sure you ask yourself, where's the risk? And that's obviously going to be the downside, especially if prices stand well above the $5 level versus the top side, which, as we saw last summer, we don't have quite that much room before that market likes to top out.
You mentioned the consolidation in wheat today, and I look more on the small grain side, spring wheat, oats. We've just seen an explosion in oats here since you and I have last talked, and watching a lot of those small grains, it's been interesting to see how those have performed here, and one has to wonder if we'll see any more movement to the top side after Tuesday's reports in some of those small grains, John.
I think the market's actually setting itself up pretty nicely for that. Just globally, you got some concerns on dryness in the Russian and Ukraine regions in terms of heat and dry and some of their crops that they're getting in the grounds. We're watching good strength in European wheat prices. Global demand looks really good right now. You just look at the tenders that are out there. There's a lot of them out there for wheat. So the competition is strong. And then you mentioned the oat market, which we're at all-time high, 673 today in that December contract, up another 19 cents after finishing limit higher here on Friday. That just opens up a question, is there some acre battle going on between oats and spring wheat? That's the typical region that we could see that happening. What spring wheat Friday did put in a new contract high itself. So, we're seeing some things that are kind of brewing there. And then, we talk about the acre battle in general, and that's probably some of the pieces that's holding corn together here is what, look at the strength in wheat compared to corn. That's the first battle we'll have. Then we'll see where corn comes in compared to beans. Obviously, we haven't touched on fertilizer costs and input costs and where they're going to be this year. So there's a lot of little pieces that are moving around in this market. And, we'll see what this oat and wheat market wants to do, going forward. Charts look strong. We're in some consolidation, some, checking back to support levels. We don't get any numbers that are surprising, which we're not expecting much tomorrow on the wheat numbers. It wouldn't surprise me that wheat kicks back in and becomes a leader just given the strength of the market globally.
Well, shameless plug. We're going to be talking about fertilizer prices later this week on the show. So that'll be a discussion that will be very interesting to look at and how it relates to the market trade as well. John, let's flip over to livestock. Cattle and hogs today fairly mixed. Hogs under a little more pressure than the cattle market. And it's kind of been the MO here the last 5 or 6 trading sessions. What did you see on the hog side today that contributed to some more of that pressure?
Well, the hog market's been dealing with some cash market issues. We continue to see direct trade cash prices slide. That just keeps some weight on those hog prices overall. Now, maybe we're starting to find some stability. I think this $80 window on December is a pretty good floor. It wants to kind of hold that. We've rallied off that level again today. Now, we'll have to see. We need to see the fundamentals come around. We're expecting the slaughter numbers to start tightening up. But again, it's a seasonal window. Maybe some of the demand starts shifting and becomes a little bit more focused on beef as we look towards the holidays. So we'll have to see how that kind of plays out. I do like the hog numbers, at least going forward. After we got that quarterly hogs and pigs report, we had that pop in price off it. But boy, we've got a lot of volatility, a lot of gaps on the chart. So it wouldn't surprise me. We see this market just kind of move around, tighten up a little bit, fill those gaps, and then start focusing on where the numbers are going forward. But I think this $80 level seems to want to hold December hogs, at least right now, given the numbers that are out there, and we'll see where we progress from there. Cattle side, quiet day today. I was kind of wondering what we would see. We're right at the top where we could break this thing back out to the upside or see it roll back down and come back and maybe retest some of the areas that we were just at. So today I was just kind of sitting back going, all right, cattle, what do you want to do? And it just really never went anywhere. I see retail values are mixed, but again, maybe a little more holiday seasonal stepping in now. So we'll have to watch if choice carcasses and finally get a little bit of a bid. We have production was up about 3% week over week last week, so we got a little bit of beef in the pipeline, so that might keep the packers a little more quiet this week. So we'll see where we are from here. But still not liking the shorter term picture in cattle because of supply numbers, so it would shock me we get some profit taking again off this little pop back and then go back down and possibly retest sub 130 level, especially with a bear spread market.
John, what are you seeing in the dairy side of things as we start off this week?
Dairy had a heck of a run. We got back up above the $18 barrier, poking at the $19 window today in November. I know it's a window for me for producers. If you're not getting something secured in here, you probably need to get going. $18 and start to protect that level is pretty solid. You're looking at all class milk prices for next year. We're poking over that $18 window. That's a really good starting point. Now, we've had a good move in cheese and butter and those types of products. Again, that seasonal demand for the holidays starting to pick up a little bit, so that's really helped us out. But those markets move pretty quickly, and we know how the dairy market can quickly turn over. I think it's a spot if you're looking at either those DRP programs and building a floor, you should just definitely get something in to protect profitability and still keep that upside open.
Well, John, as we again look ahead to tomorrow's WASDE report, any final thoughts? Anything you want to reiterate? Maybe is if a producer could make one move or should make one move ahead of this report tomorrow. I know it depends on their situation, but what's something they should really, really focus at?
Realistically, it's about the floor here. You got to look at where we were compared to last year. Talked to a client today. He was talking about even selling some 22 beans. And, we're $2 ahead of where we were last year in this window. So where's your risk? And it's realistically to the downside, whether it's this extra supplies, lack of demand, increased production, which is all the things that we're starting to see develop. That's what concerns me the most right now, especially if you've got those high at-risk bushels, which you're going to get off the field and get right to the elevator, having some floors underneath this market. I'd much rather watch a 20-cent put go worthless underneath the market than watch your prices drop 40 in that regard. I mean, you're long the market as a producer with the bushels. Make sure we just protect your area of highest risk, which is the downside.
Well, a lot of great things to consider, and I know it's going to be a busy, busy day ahead and probably a busy week ahead, especially as we get those reports digested as well. John, if producers need some advice, need some help, I know they can reach you and the team there at Total Farm Marketing. You guys have a lot of great resources to help them out, don't you?
Sure. Yes, we do. Would love to chat with them anytime. Give me a call, 800-334-9779. Email johnh@totalfarmmarketing.com. And again, we got that website, totalfarmmarketing.com. I got information out there. I know we're going to have a webinar tomorrow covering the numbers, free for producers to sign up for. So feel free to check out that site and take a look at those programs.
John, appreciate the time as always, sir. Have a great rest of your week, and we will talk again next week.
Sounds great. Have a good week, everybody, and stay safe with the harvest.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. You can find us online, markettalkag.com. That's going to do it for the Monday, October 11th edition of the show. I'm Jesse Allen, wishing you and yours a great rest of your afternoon.